we have a economic growth slowdown, cyclical one. That's ongoing. We have a separate, totally separate inflation cycle slowdown. We talked about that a little while back on this show. It's the elephant in the room that there's this inflation cycle downturn. Now, from the Fed's perspective, right, their dual mandate is what's going on with jobs growth and inflation. These cyclical downturns were very much at odds with a Fed tightening cycle. And so first you saw bond yields peak out last fall, kind of getting in step with what's going on with cycles. And then you saw the Powell pivot, also, I think, belatedly getting in step with what's going on with the economic cycle. Now, what's going on globally, they have other cyclical issues too, and I don't want to get into any kind of like currency wars here, but just from a cyclical, keeping it simple perspective, the door's wide open for rate cuts.
Does, though, when the president goes on a tirade like that, whatever this week's content is, whether it's based on the ECB or based on Powell, does it lessen the likelihood that he gets that rate cut?
Yeah, you know, I wonder about that. I think that's a really good point. It makes it very awkward, right? Because the Fed ought to be, or is intended to be, I think, independent, a steward of what's going on with jobs and stable prices. This is the basic idea. That there may have been some drift in what they do. You hear a lot about financial conditions, so that's maybe broadened it out a little bit. But if we keep it simple, keep it straight and clean, what's going on with the cycle and growth, what's going on with inflation, the door's wide open for cuts. You don't, if someone's telling you you have to do something, you know, I say that to my 7-year-old. He doesn't like that. He says, no, I don't want to do it.
Ethan, is the Fed essentially backed into a corner right now, either because of the president's commentary or also just because of the Fed's own commentary and the way the market has reacted to it?
Well, I don't think the Fed can in any way allow political pressure to dictate their policy. If they give in to political pressure now, it's going to get a lot worse down the road when we're in an election year. So there's no point in surrendering to this now. You just got to stick to your knitting, focus on the economy, and do what makes sense. Now, I do think to some degree they've painted themselves into a corner. I think the Fed needs to start talking to the markets and give us a better hint about whether they're happy with what they see. Right now, the markets are saying you're definitely cutting in July. The Fed's message is we may cut in July. There's a big gap there, and the Fed hasn't helped by not giving any guidance. So this big meeting with Congress on Wednesday, the committee meeting is going to be extremely important. Powell needs to start becoming a little more specific here.
But I mean, Ethan, he's changed his tune pretty significantly over the last 6 months. Are you saying he has to spell out specifically the bond market is right, we're going to cut in July, or specifically we're not going to cut in July? I mean, that goes against what central bankers do in their press conferences and comments in between meetings for years.
You don't want to go into a meeting with the market certain that you're going to do something that you're not sure you want to do. And that's the problem right now, is the bond market has decided because they're not talking, they must mean yes. It must mean they indeed do plan to cut at least by 25 basis points. So the longer they remain silent on that question, the more the markets are determined that it's going to happen regardless of the data. It's extremely important that if they really believe they want optionality going to the meeting, you don't want certainty pricing the market. You want the markets to be uncertain so you can go either direction depending on how your debate goes. So I think it's been a mistake for them not to communicate more clearly with the markets.